November 29th, 2023. We got a couple measured moves today. We got a leg one, leg one, then we got a pullback, and then leg two. That's about where we got to, which was also around the open of the day. So there was a lot of reasons for us to bounce here. Or sorry, that was around the close of yesterday. So there were a lot of reasons for us to bounce there. Additionally, I thought at the end of the day, we were trying to get to this magnet right here, this measured move down. We got really close. We didn't quite get there. We got within what's this low? We got within 2 ticks. So some traders would consider it tested. We started losing a lot of momentum down here, but I think a lot of traders thought we need to get there. So that might be one of the reasons why we bounced just before. And, I thought the target after that would have been yesterday's low, but obviously we did not get there. We got a big gap up and a big bull bar on bar one. Generally, when you get a big gap up, the odds of a trend day in either direction increase, and the odds of a bull trend day are slightly more than that of a bear trend day when you get a big gap up. So whatever the direction the gap is, the odds of a trend day in that direction are slightly more than the odds of a trend day in the other direction. When you get the gap up and then you get a big bull bar on bar one closing on its high, that further increases the odds that it's going to be a bull trend day instead of a bear trend day. However, the daily chart, I think, kind of said the opposite. I think because of the daily chart and the context overall, the odds really were against a big bull trend day. I didn't really see that happening. And so, I was going to be pretty, adamant about waiting for follow through if we were going to get a bull trend day, because it could still happen, because it still is a big gap up and a big bull bar. So the setup is relatively good, but the problem is the context overall is really not all that good for a bull trend day because we're so overbought in the short term. And you can see bulls who bought above one, they were disappointed in the follow through they got on two. And so during three, look where the top of three is. It's right at the entry price if you bought above one. So bulls who bought above one were disappointed in bar two, and they scalped out during three around break even. You get, this is good enough for a second leg, so that might be what you're getting on 4 and 5. And 5 is probably a reasonable swing trade, but it's really not all that good. You're buying, high in what's probably going to develop into a trading range, so it's really not great. And then you get 6, bad follow through for the bulls who bought above 5. And if you're buying above 5, you need to be really quick to get out. So when you get 6, a lot of those traders are now exiting, and that's what's happening up here. Is you buy above 5, you're disappointed in 6, and so that's what's causing this tail. Is traders who bought above 5 exiting, and now we get a big bear close on 7. And you have to keep in mind, when the market tries to do something twice and fails twice, then it's usually going to try to do the other thing. And we tried to go up twice. You can see we started out here trying to go up above 1, disappointed, exited. Tried again, disappointed, exited. So we're probably going to try to go down, not to mention this is a big bear bar far above the moving average, and the overall context favors a move down rather than a move up. So I think 7's a reasonable swing trade. The one thing it has, really going against it is, well, this channel's somewhat tight. But I think the problem for me was that we were kind of towards the bottom of what could have been a trading range here, some sort of tight trading range. So it's a reasonable trade for sure. But you're a little bit concerned. This is your concern, but I think it's a good sell below 7, and you get good follow through on 8. So sell the close 8 for sure. Great pair of bear bars. More likely we're going to get a measured move down. And that's around where we got to. Follow through on 9 and 10, but I think there were it's still sell the close. It's 4 straight bear bars. Sell the close, sell for any reason, but there were some problems. I think, once you get to 10, you're basically selling right at yesterday's high. And yesterday's high is going to be a pretty important target, because some bears, imagine if you sold above this high and then you got that as your follow through, you basically got trapped immediately. I also thought, by the way, that this gap up was going to be essentially a second leg from this. And I also thought that, one of the reasons we bounced here was that it was the bottom of this buy climax. So we had a big buy climax, and at the bottom, you can see that's one of the areas we found support. But as I was saying, on 10, you're selling right on the moving average, and you're selling right at another support area. So while we got follow through on 11, it's reasonable to think we were going to test back up to that high, since it was such an important price, and probably oscillate around it for a little bit like we did. We get 13, which is a low one short. It's not great. I'd rather sell lower, like below the 11 low. So sell the breakout. Because a lot of times, low ones get bad follow through and lead to more complex corrections. And that's exactly what happened on 14. You get a doji as a follow-through bar. If you sold below 13, you were hoping for us to continue to collapse down, and you really just don't get it on 14. So a lot of traders are exiting. You can see any trader who sold anywhere down here was exiting during 15 as we touched their break-even price. A lot of traders exiting, causing the rally on 15, inside bar on 16, and then a surprise on 17. But I think 17 is a really poor buy. I was expecting traders who bought above 17 to be disappointed because the sell-off from 6 to 11 was so strong. And there was also something else really important that was going on. There was an open gap between the 1 low and the 17 high. And any trader who sold or any trader who bought the 1 low did a reasonable thing. And if this is a trading range, you should be able to get out around break even if you do a reasonable thing. So I thought as long as we didn't reach the 1 low, bears had a reasonable chance of getting a trend day and having this not be a trading range day. I was short here. I sold below 8 and I held through all of this. And I got it somewhere down here. But I thought that it's probably okay to exit above as it trades above 15 during 16, and you can sell again if there's a strong bear bar. And it's not. I don't think it's necessarily wrong to hold through 17. Certainly you can't exit above 17. If you've held up to this point, you need to continue to hold. You can't exit up here because I think it was reasonably likely the gap stayed open. But I thought it was probably okay to get out like above the 15 high as it traded above it during 17, and you can sell again below 18, obviously. So I really thought that the traders who bought, I thought the traders who bought above 17 were going to be really disappointed pretty quickly. And so that's why we got 18. The reason I thought they were going to be disappointed quickly was, again, you're trading against this, which is extremely strong. You get a doji follow through bar on 19, which isn't that bad. I think 18 is a swing trade. It's lower probability, but it's probably, I was expecting at least a couple legs sideways to down. I wasn't expecting us to continue to rally. So I wasn't surprised when we got this, and I wasn't really all that surprised when we got 20 either, but 20 is technically a surprise. I thought 21 was a surprising bar, though. I thought it was more likely that we were going to get disappointing follow through on 20. And the reason being that this is probably entering the channel phase. If this is going to be a bear trend day, this is the spike. And I thought we were going to be entering the channel phase. And so I didn't think that we were, usually when you're entering the channel phase and you're selling low, you're going to get disappointing follow through. So that's kind of what I was expecting. And surprisingly, we got a big follow through bar on 21. At this point, I thought the target was yesterday's close and the leg 2 measured move, like I mentioned. More follow through on 22, but a big tail on the bottom, indicating buying pressure, and more follow through on 23. But again, an inside bar, so potential final flag, and buying pressure on the low of 23. So it's a micro double bottom. I thought okay to pretty much be willing to exit above any bar at this point. And one of the reasons I thought it was okay to exit above any bar is because this is too much, too fast. We're selling off so strongly, and I thought it was more likely at this point that we were going to go sideways because this is such a strong move that usually you would need a channel instead of another breakout. And when you got another breakout, it made me think that we were probably going to end up getting a pullback to maybe the 15 low and let those limit order bulls out because this is too steep. I mean, think about it. This is where the move started. So bar 7 is where the move started. And in 20 bars, it went down like 0.6%. And, there are days where, you'll get like -4 or 5% days, obviously. But usually when that happens, you get a big gap as well. You probably haven't seen many days where it ends up being like, -5%, where it opened pretty much flat. So my point being, you're probably not going to see a 5% move in one direction from this swing trade. So it made me think that we were more likely going to go sideways to up for a couple of legs rather than just continue to get these spikes down because, it was just unlikely. And so because of that, I thought it was okay to exit above any bar because, the pullback can be pretty deep, especially with all this buying pressure down here and the fact that you're at the leg 2 measured move and the fact that you're at yesterday's close. So I think a lot of traders exit above 25 and you get a bull bar on 26. The remaining traders probably exit above 26. You get some follow through for the bulls on 27, an inside bar on 28, and outside up on 29. These 4 bull bars is enough for a second leg. It could be 1 pullback, 2 right at the moving average, but I don't think that it's a very good sell below 30. It's a doji bar. I don't think 31 is a good sell even if it triggers. This is a pretty tight bull channel, and it's probably going to get a second leg up. I think that we're going to need to probably get back to the 15 low after we get these full bull bars, I was pretty sure we were getting to the 15 low because this is strong enough for another leg. And, this is probably actually the top of a trading range. I thought this might be the top of a trading range. You can see, we got a tight trading range in here, and we came back and tested the apex of it, because oftentimes you do test the apex of tight trading range. It's kind of like what 48 did. We got this tight trading range, and then we got vacuumed back up into it on 48, tested the middle. So bad follow through for the bulls who were buying 29. I didn't buy any of this. I try not to do that. I just feel like it's too counter trend. It's probably viable to buy somewhere in here, but I don't see any of these as good buys for the style of trading that I do. 32, it's essentially a high one. And you get follow through on 33, 34, and 35, but they're doji bars. It's really not all that great. I think that the 15 low is probably the magnet, which we did touch on 30, 35. Follow through on 36, but how much more is really left to the upside? Do you think we're just going to get a giant bull channel that leads you all the way back up here? Probably not. And then we started to go sideways for 37, 38, 39, 40, 41, 42. At this point, we have a 6-bar tight trading range, so you need to be extremely careful, because when you get that much trading range behavior, the odds are breakouts are going to fail. And you can see we tried to break out to the upside on 40, 43. We failed. Tried to break out to the downside, failed. 44 attempted again to break out to the downside and failed. And you can see it could be down, up, down on 45. So you could be selling a third leg down in essentially a parabolic wedge. Additionally, this was a pretty tight channel, and I thought we needed to go sideways a little bit more. I thought this tight channel still had influence over the market at bar 45. And bar 45 closed at the low of 44, but it didn't close below it. And I thought that was important, because at this point, you pretty much want everything to be perfect if you're going to be selling against a tight channel and a breakout of a tight trading range. If you're going to take a sell like 45, you pretty much need everything to be perfect. And I thought that subtle little detail that it didn't close below 44 was, another disappointing factor. And then you get disappointing follow through on 46. And if you're selling a bar like 45, you again want perfect follow through. So if you were to sell 45, you want to see a big bear bar like 20, and you get a doji bar on 46. And so when that happens, traders see that in 47. A lot of the traders are exiting around break even, knowing the trade they took wasn't all that great and the follow through is not all that great. A lot going against them. We're probably going to stay in the trading range. So I think a lot of traders exit around break even, causing 47. And the remainder of the bears exit above 47, causing 48. But I think 48 is just bears buying back shorts. And so there's no one really left to buy. I don't think bulls want to buy in the middle of this tight trading range. And so you get disappointing follow through on 49. It should be notable that, at this point in the day, I was looking for a swing down. And I was hoping, if 49 stayed an inside bar, I probably would have sold it. But it ended up getting too big. And so traders ended up scalping out. And it wasn't really, it wasn't ideal, because 47 and 48 were probably strong enough for a second leg up. So it wasn't the most ideal short anyways. And because there was a trading range, it got too big, which happens a lot. Sorry. 50, a bull bar closing, very near tie. I think you could buy above 50. You have a tight bull channel here, and you're hoping for a second leg up. And if you start to get a second leg up, it's probably a trading range day. And if it's a trading range day, the open of the day is a magnet. So I don't have I think you can buy above 50, but it also makes sense to just wait. If you're going to get all the way up here, you can wait till you get another bar that looks like 50 after 50. So maybe if 51 looks like 50, then you can buy and hope to get the move up, better probability. But I don't think it's the worst buy above 50. But the thing is, a lot of times you're going to get kind of disappointing follow through like 51, and you have to be prepared to sit through it. Kind of similar to, what I was talking about over here in yesterday's. If you're going to take a buy like this, you have to be willing to sit through a pullback or two. And I thought, if you're going to buy above 50, you might have to deal with something like 51 and just hold long, because 51 is really not a credible sell. And I thought 52 was almost more disappointing in a way. I was disappointed in 51, obviously, but I thought that we were going to get, if you're going to do that, you need to get a good bull bar closing on its high on 52. And we just didn't get it. And so a lot of traders start exiting around break even during 52, 53, inside pattern to 54. And the rest of the traders probably dump their positions, 55. We get back to the 49 close, and that's where, traders are buying back shorts. Although 49 is not the best sell in the world, it's a big bar. So some traders would sell the close, hoping we were going to collapse down to the 25 close, because the 25 close was a reasonable sell to close bar. And usually reasonable sell to close bars or buy the close bars in trends get tested. even in trading ranges, they usually get tested. This is a trading range. And so you can see 55. Think about if you sold the close of 49, how disappointed you are in 50, 51, 52, etc. So, a lot of traders willing to exit around break even during 55. That's what this is. And that's what's causing 56 is the bears exiting at break even. 57, a doji bar. Then you get an II, 58, 59. Because it's an II, you can probably sell 59. But, we were in a trading range. So I was just really trying to wait for follow through. Thought 60 is a good sell. You're hoping that we're basically going to get a vacuum test down here, and you start to get follow through 61, sell the close 60, sell the close 61, and you get a big parabolic bar down on 62, but you're testing essentially the 25 close. So I think, if you sell the close of 62, you have to be probably willing to sell more around a 50% pullback, and you can't be exiting anywhere in here. And because, 62 really just seems like a vacuum test of the bottom of the buy climax and the 25 close. So disappointing follow through on 63 because all the bears are taking profits instead of selling more. 64, a bull bar, pause bar 65, and another bull bar 66. So I look at this as one, pullback two, so a two-legged correction. 67, a bear bar, but not a very strong close. I'd still be flat, and then a doji on 68. So we have 3 dojis in the past 6 bars. Pretty, trading range behavior. And then a big bear bar on 69, which is a surprise. I think it's a good sell below 69. It's always in short. You can take it for a swing, and you get follow through on 70, 71, 72. And at this point, I thought we were looking to get to that measure move I mentioned earlier of this to that down. And so I think a lot of traders are going to, they're going to hold and hope that we get there, but they're also going to be ready to exit above pretty much anytime we trade above a prior bar because they don't want to give back too much profit. So that's why you kind of got a sharp move up on 75 because traders were exiting below the bar too, but also above the bar. They were considering, the measure move tested. He's only 2 ticks below. So traders started exiting, and then you get to move above the bar where the rest of the traders get stopped out. And that's what's causing this. And if you were holding literally for always in, you exit above 78. I think bears exiting is what causes 79, 80, etc. For always in trading today, this is pretty much an ideal day for always in trading. I thought sell below 7, sell the close of 8, maybe sell the close 9, maybe sell the close 10, but you're probably gonna have to sit through a pullback. Same thing with 11. Maybe you exit above 15 during 17, or you can probably hold. It's just, if you're just trying to hold as long as possible, I think you can hold through, but you have to be a bit careful. But you're basically just hoping the gap is going to stay open with the one low. You can sell again below 18, sell the close of 20, 21. Maybe you could sell the close of 22, but you're kind of starting to get into dangerous territory. You need to be willing to get out quickly. I'm sure there's reasonable buys in here, but I don't personally see them because I just don't want to trade against this strong of a trend. It just doesn't seem like a good idea. I thought 51 was a reasonable buy, but it's more of a trade, not an always in flip, and it's probably better to just wait for follow through. If you can't tell, a lot of times I'm biased. I'm biased about 50 because I took 50 and I exited at break even during 52. And looking back on it, maybe it's not the best trade. It's probably better to just wait for more follow through. But I took the trade, so I'm going to consider it reasonable. Reasonable sell to close 60, 61, and a good sell 69 or close of 70 or 71. But again, you're getting low in what's probably a pretty overdone bear trend at this point. So on the daily chart from here, it's a good bear bar. You can see it's pretty much a big failed breakout and a bear bar closing near its low. I think low probability, maybe 25, 30% of the time, you're just going to get a big bear bar closing near its low tomorrow, a big collapse. I think more likely we'll try to get some sort of, move down early in the day, but probably going to end up a bit more sideways to down for a couple of legs rather than just straight down. But there's definitely, no reasonable possibility if we start to get strong bear bars tomorrow, there's a reasonable possibility we just get a huge bear trend day tomorrow. I think that in general, so after you get a bear trend day, there's a 25% chance of a big follow through day, a 50% chance that you're going to get some follow through selling on the open of the day tomorrow. So 50% chance we get some follow through selling, but there's a 75% chance of 2 hours of sideways to down trading, sideways to up trading starting by the end of the second hour. And obviously there's 75% chance of 2 hours of sideways to up trading and a 25% chance of a big collapse. So there's, that's the math. And yeah, this is essentially forming a double top with up here. And, kind of just proving what we all probably already knew is that this whole big thing is a trading range. I'm expecting us to get a pretty deep pullback. I'm kind of wondering right now if we're going to, close this gap. I think this gap's kind of interesting because if it's a trading range, then we're probably going to close this gap. But if this is going to be the start of a bull trend, we'll probably start bouncing before we close this gap, and then we're going to get a reversal up. So I think if we do close this gap, the reversal up has a slightly lower probability of succeeding than if we don't close this gap and then get a reversal up. But I regardless think we need to pull back for 10 bars, 2 legs at the very least. All right, that's today.